Welcome everyone, another episode of Financial 15. Kevin and I have lots of good information today that's going to help out with your finances, and we're still talking about housing. We've done a couple of videos now on the housing series. Be sure to check them out. And the one today is talking about bubbles. Is the Canadian housing market in a bubble? We're going to tackle that. You want to stick around.
Yes, housing bubbles are our topic today. And remember, if you want to find out more about this, any series or any of the other videos we've done, please go to our website at beckerorr.com or like us on Facebook or subscribe to our YouTube channel because we've got all this content and more. So, Clint, why are we calling it a housing bubble right now?
Yeah, there's lots of reasons people are calling it a bubble. One of the big ones, prices are sky high. We talked about this in one of our other videos. You can look across Canada, and everyone knows the markets, Toronto, Vancouver, Victoria. They're the highest, in some cases well over $1 million for a typical home. And then other parts of the country, they've seen an increase, but not quite to the same level. But those sky high home prices, one of the reasons everyone is pointing to a bubble, because they're getting a little out of reach for the average Canadian. So they're getting to that area where it might not be as affordable. And that also brings us to the next point. Why people call it a bubble? You have sky-high prices. You have lots of debt. This is Statistics Canada statistic. It's household debt to income. The most recent number, this is for Q4 of 2020, 175%, which means for every dollar of disposable income, the average Canadian has $1.75 of debt. That's a high ratio, but that's actually not a record. It was higher in 2019. It was over 180%. But high levels of prices there, Kevin, high levels of debt. Two reasons people are calling this a bubble. And I'd say a third is we all have a story, right, of someone that paid $100,000 over asking or all these bidding wars. Have you heard some of those stories?
Yeah, definitely. And again, when you look at that debt, it seems to be a huge number. But again, these people qualify for this sort of scenario. So yeah, I've heard the prices where, you're $50,000, $80,000, $100,000 over asking price because you need to get that house and you need to get it now with the way things are going. People are looking at this and saying, look, I need to get the home while I can because prices are cheap and stuff along those lines. But again, this is part of the reason why. Again, what else do we remember from the last time?
Yeah, so these are all reasons why we're saying it's a bubble. We all have a story. We've got sky-high prices. We've got that high debt. And I think one of the reasons, as Kevin just mentioned, it's psychological, right? And this is a quote from Ben Carlson. He's got a great blog, A Wealth of Common Sense. In one of his recent articles, he writes, recency bias causes people to invest in the rear view mirror by constantly fighting the last war. So we go through one bubble, suddenly we're scarred from that, and everything looking forward, we compare it to that. Say, this has got to be just like that last time. So we always have that in our mind. So everything going forward, we call it a bubble. And let's talk about that, Kevin. Walk us through what happened last time and compare it to what's going on now.
Yeah, basically we took a last bubble, which is the 2007, 2008, 2009 sort of scenario. What we're seeing here is a U.S. charting of what went on. And if you take a look back in those early years, you've got some yellow there and some deep blue. That is the subprime loan market. That's the teaser loans. It wasn't just about, I have to get my home because I qualify. Everybody needed to have a home back then. They needed to get into a house. It was your right in America to have a home to live in. Canada was not quite the same here because we don't have that sort of teaser or subprime area. So we never had the same sort of fall going forward. But as you can see, the qualified loans weren't that high. Whereas if you look at it in today's market, everything else they're qualified. They're more than qualified to have these homes going forward. And the buying has been going up and up. If we take a look at this in sort of a general, back in the 07, 08 area, it was institutionally driven. The institutions wanted more and more mortgages so they could sell them as mortgage-backed securities. Whereas today we're getting it's retail driven. All these people qualify, but they all want a home based on a whole variety of different reasons that we can touch on. But that's sort of the scenario. And as again, when we mentioned Canada, US, the Canadian side didn't have as severe a 2007, 2008, but we are experiencing pretty much the same thing going forward in 2020, 2021 right now. So that's one of the stories. What else do we have on this bubble?
Yeah, so this data first off is from the New York Fed. It is U.S. data looking at credit scores for folks that are getting mortgages. And like you said, the credit scores, they were not very good back in that 06, 07 period. Now they're actually quite high, so it's people that are qualifying. Canada, different market. But let's tell the Canadian story by zooming in on one of what often people call a bubble is the Toronto market, one of the hotbeds here. This data is from precondo.ca. They've got lots of good information. You should probably go check it out. This particular slide, though, Kevin, I think it talks about supply. And we don't have 2020, 2021 on this graph, but we do have lots of data going back in the Toronto market. And you can see that orange shaded zone, which is the months of inventory. And then you get that purple area, which is the average price. And no surprise, you can see the inventory going down while the price is going up. So less and less supply, higher and higher prices. This is economics 101, isn't it, Kevin?
Yeah, that's exactly what I was going to say. This is just basic first-year university economics if you're going to learn it. What is everything driven by? Supply and demand. And as we saw, as the supply comes down and comes down and comes down, there's not enough out there and there's more people bidding, that's going to cause your demand to go up. So, I mean, it's a perfect line that we see going basically from the beginning of that chart right through to 2017. You see that the demand all went up because the supply was going down. All of a sudden, you get a little bit more supply on that side. The demand comes down a bit and you start to get those numbers going a little forward. And as you mentioned, this is only until 2019, where if we see this chart going forward till where we are today, you're going to see that purple line going up again, and you're going to see that yellow line going down again, just because the bake's in there. And that scenario on fair housing plan, that is a scenario that went through from the government to try and slow housing prices down. We're not going to touch on that right now. That'll be a later video, but that's one of the things that we can get to. What else goes on in the Toronto market here, Clint?
Yeah, so again, we're trying to tell the Canadian story by zooming in on one of the hotbeds, and we got a chart that really looks at supply. And again, precondo.ca, I'm going to give you a quote from their website. This is for 2018 data. It's in 2018, we built roughly 35,000 homes, but we gained 125,000 people. So lots of folks coming to Toronto, only so many houses being built. That kind of gives you an idea of the supply. But let's talk about that demand. Let's talk about why so many people are going there. What we have here is a chart that's from urbantoronto.ca, and it looks at the metropolitan areas, the 20 biggest metropolitan areas in North America, and it looks at their population growth. And look at the top of that chart, Toronto, fastest growing, and this is across North America. So Dallas is in there, Phoenix is in there, all the big US cities are also ranked here, and it goes right up until pre-pandemic, right up until 2019, because in the pandemic, not so many people moving around, but up until 2019, Toronto was top of that chart. So lots of people moving to Toronto. That's a lot of demand going into housing. What else do you see on this, Kevin?
Yeah, I mean, if you take a look at it, I mean, we're basically 1/10 of the U.S. population, but 5 of the top 20 cities are Canadian for that growth scenario. So, I mean, that tells you a lot. And again, one of the things we must emphasize about this, even though we're dealing with Toronto as a scenario right now, this applies across Canada. It is not just the Toronto market that's doing it. You'll notice Vancouver's market is high. Montreal's market is high. Those are some of the most populous cities in the country, and they continue to grow and grow and grow. So that's part of the demand that we're seeing going forward in this as to how things are going. But yeah, demand on this is going to be a big driver for what's going forward. What are some of the other reasons why we're seeing what they consider to be a bubble?
Yeah, so you have that population growth pushing up demand. Another big factor, and this is across Canada, not just the hotbed markets, but it's the demographics. We talked about this in another video. It's the millennial generation. They're in that age where they start buying homes. They're in that kind of roughly 20 to 40 age range, depending how you define millennial, which means they're buying a home, or maybe they already have a house, but now they have a family, they're trying to upgrade a home, and it's now the largest demographic in Canada. It's actually larger than the baby boomers, and that's right across Canada. So you've got population growth in some of the hotbed cities across Canada. You have that demographic, particularly the millennials and the age to buy homes. And then, Kevin, the topper that everyone always talks about, the record low interest rates.
You mentioned record low interest rates. That's another reason why you're seeing the millennials, why you're seeing any immigration that's coming in or anything else buying houses. Right now, it is dirt cheap to be able to get a mortgage. You're not paying much in interest, so why wouldn't you go and get that home while you can? And of course, the forecast is that rates are going to stay low for quite a while yet, whether it's 2022, 2023. So now is the time to get in so you can get the house at the price you want. So record low interest rates are another force driving those prices higher and higher, and why the demand for this keeps going forward. As you mentioned beforehand, when we were looking at it, 35,000 new homes, 125,000 people. Can the supply be brought up there so that we can meet this demand?
That's the question, isn't it, right? We've got all this population growth in the hotbed cities across Canada. You have all the millennials that are getting that age where they start buying houses, and you got record low interest rates. So you got a lot of demand chasing a minimal supply. Can the supply catch up? A little bit of data here. This is from Statistics Canada. They've had consecutive record levels of investment in residential construction. That's in September of 2020. It hit a high in February. You can see the number on the screen there, $12.3 billion. So lots of money going into construction. And keep in mind, this is in the middle of a pandemic that these record levels of residential construction are taking place. What do you think will happen here, Kevin, once the pandemic's over?
Well, yeah, I mean, and that's the other thing. We're getting these record highs now. Once the world opens up again and that pandemic starts to subside, we're going to see a variety of different options going on. Now you may have people who were reluctant to sell their homes beforehand will be selling it because more people can come through to take a look at it. You can increase supply that way. Not only that, but as you open the economy up, more and more people can be put to work. So all of a sudden, laborers that maybe weren't there before, if you have more of a labor force, you have more people to build the homes. So there are rationale for why we may see some of these supplies going higher and higher as we start to get out of this pandemic. But I mean, that's one of these sort of options that we're taking a look at. How does this forecast go for the rest of this year and going forward with this sort of bubble commentary?
Yeah, so when we get to the bubble, this is from the Canadian Real Estate Association. They do regular forecasts. This is the most recent quarterly forecast. And you can see for 2021, they're not saying that supply shortage is going to be finished. So we're probably going to have a lot of demand, still short in supply. So you could see those high prices. You can see their estimates. They're saying for Canada, on average, 16% growth in terms of housing prices. They go down per province. The highest province there, Ontario, at 21%. The maritime provinces in the 5-6%, but the key here is they're expecting some normalization. You talk about reopening, that's part of their forecast as well. More supply comes on the market, more homes getting built. You get to 2022, and you have more moderate growth, kind of 1-2%, depending on where you live. Now, I'm not sure their numbers are going to be bang on. Maybe it'll be different. Maybe it'll be a little bit of a drop. Maybe it'll be a little more growth. I don't know. But the idea that it's a bubble, and this bubble is going to pop, and suddenly that $700,000 home is going to be worth $350,000. That seems very unlikely. You have some strong demographic forces here pushing demand. So in my opinion, bubble bursting, probably not. Some form of normalization seemed more probable. Are you on the same page?
Yeah, that's exactly the way I'd look at it. We're not looking at this bubble bursting. We're looking at going back to a normal market once the world opens and becomes the same place again. All of a sudden, people will search for things, but I don't see that big, massive collapse. Again, when that happened back in 2007, 2008 in the U.S., it was because there was subprime and teaser mortgages. It was because people didn't qualify. We have qualified people getting these homes. They will go, if interest rates move sort of in that inflation area, things will normalize out. Could you get a correction? Sure, you could, but you're right. Going from 700,000 to 350, we just don't see it. It didn't happen then in Canada. It didn't happen in 2000. Even in the 80s with high interest rates, we never had that massive collapse. So I don't believe we're going to get that going forward here. Small corrections possible, but housing bubble, I'm having a hard time buying that's what it's going to be.
Yeah, the demographic forces there just don't line up. They don't line up. But we talked about how supply could come back online and already starting to go back online with that record number of residential construction. We're going to get into future videos. We'll talk about what they might be able to do, right? The government has said they're going to take some action. Maybe there'll be new taxes, maybe there'll be more restrictions, and an additional stress test. Lots of options there they can do to help calm down the demand side of the equation, to help cool off the pricing, or help cool off the housing market. So we got more videos coming up on housing. You want to stay tuned to that. Any parting comments, Kevin?
No, I think if there's anything you want to comment on this video or our last one in this series or anything we've seen on our website, please feel free to talk to us. Chatwithclintonandkevin.com at the bottom of the page. We are more than happy to answer any of those questions you can. And as you said, the next one we want to deal with, how do we slow the housing market down? That's one thing that needs to be done according to a lot of the banks. And they want to know whether the government should be involved or not. So again, something else we can talk about. Please tune in for the next video. That is going to be really worthwhile watching.
Absolutely. Take care. We'll see you again real soon.